Hello there, Maverick Traders. This is Rob Reinhold. We are at the end of July, so let's get into it. In this session, we're going to be going over the news of the week. We're going to go through all of the sectors, score them from strongest to weakest, and that's going to tell us where to go make our trades.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Well, it was another up week, and the markets just simply churned to new all-time highs. Now, I use the term churn because it wasn't exciting, it wasn't sexy, there wasn't a lot of movement, really tight candles. We'll take a look at the chart, and we're seeing the lowest volatility of the year. So volatility, you can measure that in a lot of different things, but if you just take a look at what's called historical volatility, it's how much something actually moved. Implied volatility gets in people's expectations of how much it moved. But right now, lowest historical volatility of the year, meaning we're getting the smallest movements intraday. That is actually very supportive for higher prices. And so that's why I use the term churn, is that we just simply floated up. We simply drifted higher. We did get some more news on the tariff front. The US and Japan have reached a 15% tariff agreement. The Japanese stock market liked that quite a bit. It jumped about 4%. And there's other deals allegedly close. We also are right in the middle of earnings season. And I've got to say that this week's was mixed. We had a lot of companies, and this was a very big surprise to me. A lot of companies miss earnings. And yet the industry group and the sector was completely unaffected. The only group I can think of were the chemical companies, because Dow, DuPont cut their dividend. So a lot of people are worried about dividends in that sector. But other than that, a bunch of companies missed guidance and the market traded up on the news. Here was the big news of the week. Google, they hit their numbers and they actually missed some of the numbers because of increased AI spend. Just think how positive that is. Google isn't making as much money on the bottom line because they're having to spend so much money on AI. That is so bullish to other technology companies. So Google still went up on their earnings, but this was like a great pre-announcement for any technology company dealing in AI, is that Google, who's huge, is going to spend more on AI than they expected. It's a very, very bullish signal to the rest of the market. Last week, we didn't have much on the way of economic news. Durable goods orders on Friday came in slightly better, but look at the numbers here. Last month, 16, this month, -9. It's jumping around so much, it doesn't really matter. It doesn't seem like the market cares about the drag of tariffs on the economy because they believe that the tariffs are almost over. We simply floated higher this week. Dow up 1.3%, Q's up 1%, Russell up 1%. Gold with another week after hitting resistance on all-time highs, coming down. It looks like it's going to take gold a little bit longer to break out to new all-time highs. But take a look at this chart. I talked about this last week, and here we are. We've got this high base that broke out, but it didn't break out like it usually breaks out. It just floated higher. Now we're in what I call a rising wedge, or a rising base. Rising bases were some of the hardest trades for me to take as a younger trader, because I remembered the market was down here once. And now it's all the way up here, and there's been no pullbacks. I've been waiting for pullbacks. I've been patient, and I haven't gotten any time. The further it goes, the more I'm saying it's gone too far. These typically break out in a blow-off top. Rising wedges typically lead to blow-off tops. Now let's talk about what a blow-off top is. Blow-off top is where you have 1 or 2 days of big explosive movement, and then you finally get a pullback off of that because that was the last group of people that have been waiting to buy. This market has been climbing a wall of worry. And we've been using that term for the last couple of weeks. that people are still saying, I don't want to be fully invested because of the tariffs. I'm worried about this. I'm worried about this. That's actually really healthy for a bull market to have doubters, because you get people that short and then you have money on the sideline. Where it gets dangerous is when all those doubters finally capitulate, where the shorts, they say, you know what, I'm getting killed. This is never going to end. I have to get out now. That's real buying coming into the market to cover shorts. And then you have all the people that have waited for the tariff thing to get settled. Once it finally gets settled, they finally put their money to work. There's no one behind them. There's nobody behind them, which is why we get the blow off top. The NASDAQ is just doing a rising wedge the whole time. I would not be surprised at all. I don't know if it's this week or next week, but at some point, I think we just drift higher until we get some really good news. Maybe they make a tariff deal with another country that's great news, and we get that 3-4% rally. It's at that point where I'll actually become less bullish. Until that point, I don't see any reason at all to be even the slightest bit bearish. As you can see, the heat map there is buying across the board. So here we are going into another summer week with low volatility, with a very bullish market. There's going to be some tariff news, but most likely the tariff news is going to be deals. The three big ones left that we're likely to get in the next week or two are Canada, Mexico, and Europe. Any one of those comes through and it's 15 to 20% tariff for them, that's going to be a positive, because remember, we were looking at 25 to 30% tariffs on those. So tariffs are still not great. They're still bad. Again, I was going to say that's debatable, but it's not really debatable. But they're less bad than we thought. We priced in the worst. We got slightly better. And the economy has held in really nicely with all this uncertainty. Once we get that uncertainty behind us, great. 15% tariffs, inflation's going to go up a bit, but the economy is back on track. China's the big one, but they've already come out and said that the deadline for China is likely to be delayed. So they've already telegraphed that China's not going to be done here by August 9th, I believe is their deadline. They've already said, hey, we're likely to push that back. Okay, so here we are. Bullish summer week. We got earnings coming out. Big earnings this week. Microsoft, Meta, Apple, Amazon. These are all big. And if they said what Google said, if they miss earnings because they're spending so much on AI, again, that is good news. You'll see, let's say Amazon comes out and says, hey, we missed our earnings because we spent so much. You'll see Amazon go down, but you'll see everything else go up, because it's very, very bullish to hear these companies say this. Next week, we do get some good economic data. We also get a Fed meeting. This Fed meeting, we talk a lot about Fed meetings, and sometimes they're exciting, sometimes they're not. I don't think this one's exciting. There's really no chance that they're going to be cutting rates. I think you're going to get a couple of votes in there for cutting rates. Waller has already said he's going to vote for it. But other than that, I just don't see anything here. We also have the core PCE price inflation index going to tick up a little bit. The Fed is worried about future inflation from tariffs. This covers none of that. I don't think this is even a big deal for the market. I think they're going to look through this number and they say, hey, we really want to know what October, November's inflation numbers mean. And then it is the first Friday of the month, so we get our payroll report on Friday, and you can see that it's a so-so report. 100,000 jobs, that's enough. That's enough to keep this thing going. Earnings are up. The economic numbers continue to be good enough. Remember, we went a little bit on pause on the tariffs. We're getting out of the pause. But once the tariffs are settled, I really do think this economy is going to strengthen a bit. It's already pretty strong. It's going to likely strengthen a bit. So why wouldn't the stock market go up? There's one thing I've learned, and I've learned painful lessons because I'm a perma-bear. I love to short. I love to be bearish. I painfully learned if the economy is good and people have jobs, the stock market goes up, period. Yes, there's pullbacks. Yes, there's bases. Sometimes there's even a correction. But if the economy is okay, the stock market wants to grind higher. So here we are. I don't see any reason why we don't have another week just like we had this week where it creeps up and just keeps moving. Let's take a look at the sectors. Not a lot of change here, so I'm going to race through this fairly quick. As far as performance goes, we had a big bounce back by healthcare. Healthcare went to a -1. We're back to a 0 on it. But let's take a look at the next group. The next strongest group was real estate, industrials, and materials. All right, now industrials was a +3, materials was a +2, real estate was a 0. We'll take a look at that chart. That's one of the movers here. But pretty much anything that was strong continued to stay strong. You can see the underperformer here was tech. Underperformer was tech. Everything else looked good. The utility sector, which was one of my favorites, it had a great move at the first part of the week. It had a little pullback. Let's take a look at that chart right now. Utilities was at a +3 last week. It got an upgrade. And you can see, had a nice week. We broke out the first 2 days, and then we gapped up and sold off. And then these last 2 days, basically flat. This remains a +3. I still like this sector. It's breaking out of a 3-month high base. I think it's got some power behind it. Next up was communications services. Now, I really downgraded this one saying, hey, we didn't get a bounce off the 20-day moving average. And you can see that was what I was worried about last week. All right, so we got a bounce. The first 3 days, we got a bounce. We got a gap up, sell off, and a gap down, sell off. It's right back to its moving average. I still don't love it. I still don't love communication services. The big stocks in there like Meta, Netflix, they're just not moving right now. Other things are moving. So let's move on to real estate. This was a change because we were at a +1. And I said, until we break out of this sideways range, this was the range here, I wasn't going to move. And you can see we did it. We broke out, and then look at the candle on Friday. We came all the way down to that level, and the buyers surged back into real estate to make it flat for the day. So that tells me it gets an upgrade to +2. Here we have healthcare. Healthcare would look like a little sketchy here, breaking out of the lower end of the range, but it held the lower end of the range. And now here we are back near the higher end of the range. Until one of those things get pierced, we're just going to stay here at a 0. Industrials, that's been one of the strongest sectors, continues to just crank higher. 1 day down on Monday, 4 up days, just cranking higher. Financials, same thing, just cranking higher. Mostly up days and a few red candles in there, but they just were small losses. That's it. And then my favorite sector for last week was consumer. And you can see had a really nice first 3 days, got a gap down. Thursday was an ugly day, but Friday, we actually outperformed the market on Friday. It's going to remain at a +3. Still looks just fine. Here we have consumer staples, right at moving averages. It remains a 0. I still really like this sector just for riding butterflies and condors every single week until it changes. So I think this is where you go for the sideways stuff. Technology, it didn't have a great week. It's had a big run. It based. That's just a great sign that it's likely to go higher. Nothing changes on tech. And then on materials here, we're going to upgrade this to a +3. We've got a nice ascending triangle here. And you can see we're approaching that high. We close at the high on Friday. This may need a little bit more time to back off before it breaks through. To me, I like the materials sector going from a +2 to a +3. And energy, we're just going to leave that as a 0. That's where it was last week. Until we really show some strength, we're just going to sit right here. This is where we were last week. The materials, they joined all the +3s. And we had moves up from real estate and healthcare. But not a whole lot changed. Tech, industrials, financials, consumer utilities continue to look great. Add materials onto the list. It is just nothing but bullishness right here. We only had 2 trades roll off last week. We had a sideways trade on Lilly that was, I'm going to call it break even. It was a small gain, but it's close to break even as you could possibly get. That's how small the gain was. And then we had a max gain from Amazon. So this leads us with 8 trades on. We're going to stay at this +3. So our allocation tells us this is how many trades we can make in each one of the strength ranges. So let's go ahead and add some more trades on. Communication services, I don't really love it. I don't love the sector, but as you can see, I've got a full boat of trades and I need to fill up some of the slots. So I took a +1 in communication services. I'm okay with the +1 trade in comm services. I'm just not okay at the +3. Healthcare is going to get another 0 trade as that Lilly trade rolled off. I'm going to go after a +3 in consumer. That is my favorite sector at the moment. Consumer staples. Let's just get another sideways trade going here on that one. We already have a -1 on that. And we're also going to be opening up another trade in materials. We've got a 0 on this, but it's strengthened quite a bit since that 0. So we're going to open up a +2 here on this. That's going to give us 13 trades. As you can see, we're getting close to that maximum amount of trades at 15. This is something you are not going to see from me often throughout the year. Typically, we've seen between 8 to 12 trades is typically what has been on. I'm now getting up to the higher end. I think there's a great opportunity for the next 2 weeks. We have low volatility. It's a summer environment. We've got this wall of worry. We've got a ton of money coming into the market. The only thing that can derail this is a black swan event, in my opinion. I think the market just churns higher. It's not going to be a big blow off until we get to that point. I think until that point, we just creep higher. So I think there's a really great opportunity for the next 2 weeks for you to kind of open up the floodgates for the bullish side. Now understand, everyone and their dog thinks this way. And when everyone and their dog thinks this way, I start to think, maybe it's gone a little bit too far. But that's why I'm saying 2 weeks, because I think we're going to start seeing this shift a bit. We're going into the most weak part of the year seasonality from September 1st to October 15th. That's why on August 15th, you're going to hear me saying, hey, I'm pulling back. I'm pulling back. I'm getting ready for this period in September. I don't know if it's going to happen, but I'm getting ready. That's why I think we've got this really nice opportunity here for just a couple weeks in time. Let's go through some possible trades in those sectors. First off, comm services. Remember, I'm looking for a +1. There were lots of great trades. Roblox looks like it's moving higher. Reddit looks like it's moving higher. There's lots of good looking stuff, but I don't need a rocket ship. I need something that's just not going to go down. I purposely looked for a boring stock in this group and I came across Fox. So here we have Fox. It's sitting right here, basing between 55 and 57. At some point, it's likely to push its way out of this base. So this is where I'm just going to sit with a bull call spread, a 55, 57. Just let it float up. I don't care where it goes after 57. As long as it holds that area, that's going to be a max gain. Remember, with this system, I've already determined I'm not going to be super bullish here. I'm going to be mildly bullish. So I want to find the right stock to fit that slot. If I was going after a +3, this is not a great choice for a +3 trade. There are much better ones out there. This is not a good choice. Moving on, let's go to the healthcare sector. This is where we're going to be at a 0. So we're looking for something sideways. Now, I looked through some stuff and I came across AbbVie. And AbbVie, I thought, okay, it's got everything I'm liking. I've got flat moving averages. Nothing's going on. But I do notice a slight upward trend line here. One of the things that we have to be cautious of when looking at sideways trades is to ask the question, is this consolidating or is this truly sideways? Because consolidating leads to breakouts and breakdowns, and we don't want to do sideways trades in those environments. So I'm looking at this and I say, okay, I think this thing is actually creeping higher, but the volatility on this is just not looking great. So I really like this range of 190 to 200. So I'm specifically looking at this trade saying, I want to play it here. I want to play it to float up into this area up in here. I don't think it's got the juice to move out of 200. I just don't think it has the juice, but I do think it's going to hold this bottom trend line. So we can do a targeted butterfly on this. I gave this a +0.5. It's not a +1, it's a +0.5, but just looking for it to move up into this range. 195 is going to be the max gain on this one here. Just a slightly bullish butterfly to the upside on AbbVie. Next up, now we're looking at +3 in consumer. We want a rocket ship. We want something that's wild. Here we have Royal Caribbean. This is a trade that I could have never taken as a young trader. A stock that goes from 260 up to 340 and then doesn't even base. It doesn't even base. It just keeps rising. It was so frustrating to see these because, yeah, I could tell this is where all the action was, but I was too scared to get into them because I didn't want to be the idiot that chased a stock that went from 250 up to 350. I mean, I would just think I was the dumbest person at all if it fell. How could you be so dumb? So I stayed out of it. And I missed lots and lots of good opportunities. Now, I look at these and I say, it's just a matter of time. This thing has so many buyers out there that even when selling comes into it, it's gobbled up. Where is this thing going? I think 400 is an optimistic target. I think that's possible. That's about 15% higher. But here's a great thing. We don't have to go all the way to that point. I'm looking to be a plus 3. So the 360, 380 is going to give me what I need in delta for my plus 3 trade. You could go up to 400. I think that's a little optimistic, but I'm also giving it all the way out to August 15th. So I'm giving this thing 3 weeks to run up above 380. So this is my most bullish trade I have on the board. I really like these rising high bases. I hated them as a young trader, but I love them now. And next is materials. We want to be plus 2. So not looking for a rocket ship, but looking for something that's going to move. And this is the one I came across. This has been in the news a lot. The US government, the Department of Defense, has taken a 15% share in this company to basically ensure that the United States has rare earth minerals for the next 10 to 20 years in case something happens with China. They have already committed to buy every single magnet that MP Materials creates in the next 10 years. Now, this is huge news, and you can see it's been priced in the stock. This was a $20 stock, and now it's a $60 stock. So it's definitely been priced in. But here is what I'm interested in. The price action after the news, people are still buying it. People are looking at this news. They've looked at the news. They've looked at this stock. They've looked at this company. And they've thought about it and said, this is a pretty dang good deal. Even though the stock's already up 200%, I still want to buy it. That's telling you it's most likely moving higher. So I'm going to be a plus 2 on this one. You could be a plus 3. This is definitely a plus 3 candidate. But I'm looking to be a 60-70. Bull call spread. I'm also giving that thing 3 weeks to get up there. It may not make it up there in that time, but these are the kind of stocks and this is the kind of market that creates these big kind of moves, as we've seen in a lot of stocks lately. Let's go ahead and wrap it up. Yes, the market is priced for good tariff news. Did we get some this week? Yes, we did. Are we likely to get more next week? I think we are. As I've said for the last couple of weeks, the stock market is really good at pricing in what is likely to happen. They were really good on this for the most part to say the tariffs are really not anything to worry about. They were worried back in April and we had a tumble. But since then, the market has taken this news and said, hey, I don't think it's going to be as bad as we priced it in. We need to reprice this. And now, and I've been talking to some people this week, it looks like Trump may pull the tariffs off without ruining the economy. If you asked me back in March, I'd say 100% chance of a recession. 100% chance. I'm looking at it now saying they might just pull this off. We might stay in a good economy and have these tariffs. Yes, it's going to increase inflation. I get it. I'm not a fan of them. But did it kill the economy? No, it didn't. If it didn't kill the economy, people still have jobs. There's money out there being spent and money going into the market. So I think you just want to enjoy the ride. We will worry about September when September comes. But until then, I think you enjoy the ride. Thanks for joining me. Have a great weekend, everyone. Take care. Goodbye, everyone.